to mark out your Malaysian SNR. So if you actually watch the video to the end, I actually made mention that I do not treat the Malaysian SNR alone. I combine it with other factors like other trading concepts. For instance, I combine it with the break and retest. You get, because I'm a trend following trader. Okay, so I do combine it with break and retest, and sometimes with other reversal process. So today I'll be talking about the break and retest, how to know market structure. Very very important, because break and retest work in market structure. So let me just start by saying basically there are three types of structures. You have two types of trend. You have the downtrend, when the market is making series of lower lows and lower highs. So this is an example of a downtrend. So this is an example of a downtrend. So you had a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low. So before a market creates a lower low, for you to have a lower high. Okay, now remember what I told you when we're marking out our Malaysian entry, our Malaysian SNR. I told you that our point of interest are all these highs. This is where we want to sell the market from. All these points. This is where we want to sell the market from. Now, for you to call this place a lower high, you have to have a break of structure to the downside. This is our break of structure, and break of structure. Now, once the market is creating series of lower lows and lower highs, all this point becomes your point of entry, point of entry. Now there are other concepts, but today basically I'm talking about market structure. Now what happens if the markets break this structure to the upside? So if the market is going to break structure or have a change of character, we might see something like this. Up. So instead of creating lower lows and lower highs, it start making higher highs and higher lows, higher highs and higher lows. You get something like this. This is just an ideal example. You get an ideal example, something like this. You get, this is just the simplest form of market structure, something like this. You get. So now the most important thing you need to note here is inside of every push, because if you notice, this is an impulse leg correction, impulse leg correction, impulse leg correction, or you can say this is an impulse leg, a pullback, impulse leg, and a pullback. Now as a trader, what you want to do is to align yourself with the impulse leg. You get, not the correction. Though there's sometimes you might see good opportunity to take the correction leg. You get. So what you want to do is you want to establish your low and your high. Very very important. So for this market to create a high means that it needs to break structure with a candle, not a wick. So once the market breaks structure, then that is when you can say this place is your high. You get. Now once the market starts pulling back to, start pulling down and break structure to the upside, this place becomes your low. So once you establish your trading range, which is this impulse leg here becomes your trading range. Once you establish your trading range, the next thing you need to do is to look out for your SNR around this point. Now, for instance, let's say I'm on the 4-hour time frame. Now, since I'm on the 4-hour time frame, I need to use higher time frame SNR for me to be able to enter this trade. You get? Maybe if I switch to the daily, I might now get my SNR around somewhere around here. You get? So once the markets pull back this way, once the market pull back, impulse correction into this place, that is when I will now anticipate to sell further. That's when I will anticipate to sell further. I don't know if you understand. Okay, so let me just clean this place and show you what I mean again. So I said that for you to have a bearish setup, you need to have a low, a high, and let's say a lower low. Now once you have this lower low here, this particular one, you get, that has broken structure. Very, very important. It has to break structure. That's broken structure here. You get, that's broken structure. The next thing you need to do is to, first thing to notice that now you now have an established high, which is this point. You now have a high in the market. You get this one. Now the next thing you want to know is that for this market to start coming down, because since you have a high here, that does not mean that this market has stopped going down. You get, for you to know that this place is now your low, is that this same point here, this particular point here, has to break structure, has to break internal structure to the upside. You get, because this is your external range, has to break internal structure to the upside. So what you now, let's say you now have something like this, and it breaks structure and start going up. So what I'm saying is that once you start seeing something like this, that is when you will say this, you have established a low. This place becomes your low. So if this place is your low, that means that your trading range is now from here to this point. That place becomes your trading range. You get, now the next thing you are now going to do is you will now go to one time frame above, or let's say a higher time frame. You get, for this in this case now we're on the 4-hour. So what I will now do is I will now go to the daily time frame. So the daily time frame, what I will now do is I will now mark my SNR, the visible SNR I have at that time frame. Yet, let's say this is my SNR here. So what then happens is that if the market comes back into this point and hit this point, I'm going to take a sell trade from here and target the external low of this market, which is this point. So this is where I will take my trade from. Now remember, I said this range here is what is called your trading range. Sorry, it's what is called your trading range, and it's also called your external range. Why this one that is coming up, correcting upward, the pullback, is what is called your internal range. You get? So this is how I look at the market when this is how I combine SN and market structure. So ideally, this is how your trade will be, because you want to sell. This is how your trade will be. Something like this. So you can go back to your chart and practice this concept. It's a very, very profitable setup. So for a bullish setup, the same thing you have. Let's say you have a low, a high, a low, a high. Then the market breaks structure. So this is our break of structure. So immediately the market breaks structure, what happens? It creates a low. That means we now have a low of this market. Now what happens? We want to see the market coming down like this. at this point we can say that okay, the market has created a high. The market has created a high. Now, once the market creates a high, what are you going to do? You now go to one time frame above to look for your SNR. So in this case, I'm on the daily. What will I do? I will now go to the weekly. Maybe on the weekly, my SNR might be somewhere around here. Yet, now once my SNR is somewhere around here, what happens? Once the market taps into my zone and gives me a confirmation entry. So for confirmation entry, I'm still going to talk about that one in my next video. But for this, I'm just trying to show you how I combine market structure with SNR. You get, so, and I will target this point. So this becomes my target, and this is for a buy. So we'll have something like this. Stop loss below your SNR, and you have your take profit, something like this. Okay. So let me go to the charts and show you the same thing on charts. Let me just clear out this drawing. So still on good charts. Still on good charts. For instance, let me use on good charts. Should I use a replay button? Okay, let me just explain in my subsequent video. I will not do that. Okay, let me just explain here what happened here. So maybe when I put out all the pieces together, both the pattern we'll be looking at and everything together, then I might now use the replay tool to show you how it works. Yeah, but for now, let's go to, I like starting from the 1 hour time frame. Now remember what I told you. I said you trade this stuff according to the trend of the market. You get, according to the trend. That's how you trade this stuff. You trade it along with the trend. You get. So let's say on the 4 hour time frame now. Whatever place. Okay, so we want to know how we're able to take these cells here. So let me just mark this box here because I took this cell. I'm sure I was able to take this cell. I'm good to, let's say, the 1 hour time frame. So let's close that place. Okay, so this is the point. This is the point here. So once I just mark my breakup structure, I will remove the box so that I will not confuse myself. So this is where we had the breakup structure. So this is where we have the breakup structure. And what did I say? Once you have a breakup structure, what do you do? That means you now have a high point. So this place becomes your high. You get. Now, because this place is your high, what are you going to do? You now go to one time frame above, maybe the 4 hour time frame, and mark out your SNR at that point. So in this case, my SNR on the 4 hour time frame, remember SNR is the closing price of candles. Okay, so this is my SNR here at this point here. This is my SNR. So yeah, go back to 1 hour time frame. So remember what I said? I said for you to call this place a low, it has to break structure to the upside on the same time frame. Since I'm on the 1 hour, this break of structure need to happen on the 1 hour too. So I'll have this was the break of structure to the upside. You get. Since I've established this, I might decide to take this buy trade going up because I now have a break of structure too. And once the market comes back, so how will I know where to take this trade? I will now go to the 4 hour time frame again and look for the closest SNR there. So as you can see here, we have an SNR here in form of closing price of candle, which is this. I might choose to mark it out like this, and this. So because you already, or let me just put box there so that I will not be, let me just put a box or a straight line, which one? Okay, let me just go with a box because I have a nice one here and I have something like this. So I tell you, you might choose to mark the week you get. Now let's say you took this trade, you took this buy, and remember this buy is a short-term buy because you already know that you are selling because of this break of structure here. Because of this break of structure, you are selling. You get, so you might choose to target up to this point, but it depends on how you trade to get. Let's say you target this point here, or let's just say we target this break of structure that happened here. So this is about 200 pips on gold. You get, so this was a win trade. Now this is where you want to take yourself from this point. This is where you want to take yourself from. Now in this particular trade, immediately the market came into this point here, into this point. This was where I took my first trade. At this point, sniper, and I was targeting. Remember that I told you target the range of this, the target this low. Yet, so this was my target. Yet, I don't know what happened that day, sure. And I was in profit for about. So my stop is always above that range. So I was in profit for like about 250 pips. Yeah, but I was anticipating the whole full move. You get, but what happened? The market came back, took me out here at this point here. Then I think the next day was, and I think NFP also, because I knew there was a break of structure here. This was where I now re-entered this trade at this point after I was taken out. Okay, let me keep this one and show you the re-entry. So this is where I now re-enter the trade here again. Take profit this range, and this is what you have. So this one actually played out well. Okay, but I did not hold up to this point. I think I exited this trade somewhere around somewhere around, yeah, somewhere around here. This was where I exited the trade. You get, this was where I exited the trade. So this is an example. So let me go to GBP USD or any other pair. GBP USD. Okay, so let me just show you a trade I took on USD card on with the same concept. I think this is USD card. So as you can see, I have this trade running on USD card. The same Malaysian SnR, you get. So guys, this stuff actually was what you have to, like, number one, I said it works with the trend. You have to know the trend, then you have to know how to mark up your SnR, then you just have to backtest for you to, like, be able to see them. Yeah, because if you don't backtest, you will not see them. Okay, for instance, now the reason why this market is rejecting from this point here is because of this SnR, closing price of candle. That's why you're seeing those rejection around that place because of this SnR. Now, are you going to say that, are you going to exit this trade because of this SnR? No, you are not going to exit. You have to follow the trend you get. For instance, now you're looking at this stuff on the 1 hour time frame. You notice that this is an uptrend. You get, go to 4 hour time frame. This is also an uptrend because that's taking out the last structure here. So for me, because I know where I already anticipate the direction of this market, I'm waiting for it to come back to this SnR here. This is where I want to buy from. You get. So thank you guys. Maybe in our next my next YouTube video, I will explain the thought model I add for me to be able to get these entry models on the chart.